Welcome to Bears in Exile. Today is Monday, April the 16th, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, and whatever else. Alright, maybe I should stop trying to list them all off since the brain just kind of gets a little tongue twister, and I'm sure everybody knows how that is. Alright, not a bad day. Actually, I think it was a pretty darn good day for the Bulls, or the Bears. There we go, tongue twister again. Here we are with the Dow, ending right at the midpoint of the big red bar from Friday. And yeah, that's great. That's closing at resistance. Yeah, it did get above it, even got to the very top of the candle, even getting a little above it. Didn't it? Yes, it did. It just barely peaked above it, and then retreated. Not bad at all, since the real candle is the most important part of the candle. That's real smart, huh? All right, middle Bollinger Band still above everything, closing again below the lower price consensus level, even though we were positive today. Hence the idea of this wasn't a bad bear day. 14-day RSI moving average still ticking down. Stochastics up just like on Friday. Up on the CCI, down on the RSI, up on the histogram, down on the MACD. Overall pretty mixed in the secondaries, but that 14-day still ticking down. I like that. And not doing too good in the long-term moving average bar. I mean, this thing should really be sucking that price back to the other side. And even with today being green, just couldn't do it. So, yes, I like it. And if we back out a little bit, 14 days still has some room to move to the downside. It would be much nicer to see these stochastics roll over and come down to join it. Maybe they still will. But regardless, not bad. Going to the 60-minute, looking for more information. You can see that we're going into the long-term moving average bar in the 60-minute time frame. And yeah, it's doing some damage to it, etc. But and the middle Bollinger Band's trying to get below everything. But really, high. Okay, that's not a lower high since it's sideways. But anyways, the real body part not there. 14-day RSI moving average rolling over at the end of the day, along with the stochastics, along with the CCI, along with the RSI pointing down, histogram ticking down, MACD going sideways. 60-minute time frame, not that encouraging. Yeah, maybe it could go up some more, but still not that encouraging. SPX. Ooh, look at that. Nothing like the Dow. Closing below yesterday's red candle. And big, huge tails, especially on the top, would be a... if it wasn't so long, it'd be a spinning top. But regardless, what it's doing is it's giving time for the short-term moving averages to get farther in there and do more damage to the long-term moving averages. Very nice. Closing once again below the lower price consensus level for this month. 14-day still ticking down. Stochastics up weekly. Down on the CCI. Actually, you know what? That's sideways on the CCI. Down on the RSI. Sideways on the MACD histogram, down on the MACD. Much worse looking than the Dow. Much like it. Since there's so much difference, what does the 60-minute look like? Well, it looks like we went in for a bar retest and have failed and are falling away. 14-day ticking down, stochastics going up, CCI down, RSI down, histogram sloping up, MACD very slightly ticking up. Not attractive. So, good. CompQ, the NASDAQ, even worse than SPX was to the Dow, making a new low, recent low, I should say. And did it break the previous floor? No, not quite. But it did take a good look beyond it. getting to the upper price consensus level of the previous month and stopping. Not bad. Middle Bollinger Band above everything, down on the 14-day RSI moving average, mixed on the stochastics, down on the CCI, down on the RSI, down on the histogram, down on the MACD. Very nice. And the VIX, oh, it got above 20 today and just couldn't quite hold it, closing at the highs of Friday, which in itself is not a bad thing. Short-term moving averages still bouncing away from the long-term moving averages. This is a bullish sign. 14-day RSI moving average ticking up, stochastics down, CCI sideways, RSI up, histogram down, MACD up. Yeah, it's pretty mixed. It could look better, but you know, beggars can't be choosers. So take what we can get, and that 14-day still ticking up. I like it. XOI. Ooh. Another reason why not a bad day for the bears. Short-term moving average is still pointing down thanks to the ugly red fat body spinning top that we have today, closing at a new low by ooh. Let me make absolutely sure, because I think that it is. Closing at a new recent low by a hair. That's good enough for me too. So very nice. 14-day RSI moving average still ticking down. Stochastics trying to do something with themselves. Mixed. Sideways on the CCI, down on the RSI, up on the MACD histogram, down on the MACD. Yes, it could look stronger, but we'll take what we can get. Not a bad day and not a bad position. So very cool. This will be so bad if we really break away from this general area. That'll be fabulous. TNA, ooh, hammer, no uptick. Short-term moving averages all pointing down. Down on the 14-day RSI moving average, up on the stochastics, up on the CCI, down on the RSI, up on the histogram, down on the MACD. Very mixed picture, and better looking than the Dow or the SPX, but still not attractive. Inside day, red. If that 200-day moving average goes, that's going to be awesome. And now the source of our woes, UUP. Yep. Bearish engulfing, because it's the same price here. Closing below the major price consensus level, closing at the lower price consensus level, peaking below it. Still have the middle Bollinger Band below everything. That is good for the bears. But down on the 14-day RSI moving average, mixed on the stochastics, down on the CCI, up on the RSI, down on the histogram, sideways on the MACD. Not really attractive, and that is good for the bulls. So there's one thing that really can mess things up for us. If it had not been red, today would have been totally different, but it is what it is. FXC, fat body spinning top, bullish engulfing, got an uptick, almost resolved it intraday at 131, but not quite. Sideways on the 14-day RSI moving average, up on the stochastics, up on the CCI, down on the RSI, sideways on the MACD, up on the MACD histogram. Yes, this can cause problems for the bears. Absolutely. So something to watch, and it did close above the lower price consensus level today. So that, along with an uptick, I don't like that. But yeah, sometimes the upticks don't do their thing, and hopefully that'll be the case here. Just don't know yet. GLD, little doji star, closing below the lower or the upper price major price consensus level, and above the lower price consensus level. 14-day RSI moving average still ticking up. Stochastics attempting to roll over. The fast doing it, the slow not. Down on the CCI, down on the RSI, slightly down on the MACD histogram, sideways on the MACD. Not attractive. We need better indication of direction. If the secondaries want to get reset at the moment, it's totally fine. We just don't want to see the price fluctuate too much. And SLV, very similar, not quite. Spinning top instead of doji star. 14-day ticking sideways. Oop, that's different. Stochastics both pointing down. Oops, that's different. Down on the CCI, down on the RSI. Slightly up on the MACD, and MACD histogram going sideways. Yeah, very mixed, but definitely not as good as gold. And GE looking for a better read on the Dow. Inverse hammer. 14-day still ticking down. Stochastics up, CCI up, RSI down, histogram slightly up, MACD down. Very, very mixed. It's all about taking out the previous floors. We did get a peak below Friday's candle. That is encouraging. But and the short-term moving averages still look really good for the bears. Long-term moving averages still need to take some more damage before it's not a factor anymore. But nonetheless, it will be taking damage rather rapidly as all of the short-term moving averages are inside of it, and they're still pointing down, and it's going to be it's good. No matter what happens at this point, this is good for the bears. Even if we were to pop up, the damage it's going to do is going to be make the next leg down much easier. And Apple. Ooh, look at that. The mighty Apple closing below the major price consensus level for this month for the very first time. Nice. 14-day RSI moving average ticking down in rather powerful fashion. Joined with the stochastics. That's why we like them to move together. CCI down, RSI down, histogram down, MACD down. Ugly, ugly. So the only saving grace is the long-term moving averages. Can it slow it down or even catch it? We don't know at this point. It would be fine if it did, in that that's what they're supposed to do. But even that, at the bottom of it, is the lower price consensus level. Until that is taken out, then it's not a real waterfall. But still, we can have more to the downside, all the way down to 50-50 roundabout. And that's a good $30 down from here. Need more data, but this is very encouraging, especially when it comes to the NASDAQ, and yeah, very nice. And Starbucks. We're talking about this one in the Friday video, and look at that, very nice, very, very nice. Bearish engulfing in a really nice manner. There's stories coming out about this one being so well overbought, and that its true value should be down at around $50. I don't know that it can get to $50, but we do have a downtick today, and that gives us a target of 58, and that's more than doable. But 14-day RSI moving average, look how high it is, and it's ticking down. Finally, it's ticking down. Along with the stochastics, minor. Down on the CCI, down on the RSI, down on the histogram, down on the MACD. Ugly looking chart. Has lots of potential for the downside, but it is early. We have to be completely honest. Even though we're hoping for the best, this is early. So, is there anything else? Oh, duh. XLF. Inside day spinning top. It could look a lot worse, but it is what it is. 14-day RSI moving average ticking down, stochastics up, CCI up, RSI down, histogram up, MACD down, very, very mixed. Indecision candle, middle Bollinger Band still above everything. Long-term moving averages starting to take damage, but we don't have the short-term moving averages inside the long-term moving averages completely, although we did close below the lower price consensus for the month. Yes, overall this is still definitely slanted bearish. And VXX. Inside day, that's unfortunate. Almost a fat body spinning top, closing above the major price consensus level for this month. Lower middle Bollinger Band below everything. Still have not gone up for a test of the bar. I don't like that. 14-day RSI moving average ticking up good, down on the stochastics, down on the CCI, up on the RSI, down on the histogram, up on the MACD. Very mixed, not nearly as strong as VIX, unfortunately. So, is there anything else? I guess that'll about wrap it up. Not a bad day for the bears. I do think that this was the bull counter after Friday, and just didn't come off very well for them. So hopefully we will get another attempt by the bears for a test at the floor, and then we'll have to see how that does. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.